The Bank of Canada lowered interest rates by 25 basis points today, its seventh consecutive cut. Here to discuss the decision is Lauren Bellai of TD Asset Management. Lauren, thanks very much for joining us. Given all the market volatility and uncertainty over U.S. trade policy, was this a surprise for you?
Today, no, it was fully priced into markets. But if you had asked me 2.5 weeks ago if I thought the Bank of Canada was going to be cutting rates, I would have said no, unless we had a tariff situation, which is where we find ourselves now. What we actually have seen is the Canadian economy was actually firming prior to this. We saw GDP per capita, so growth, coming in positive in the third and fourth quarters for the first time since the beginning of 2022. We saw unemployment actually fall to 6.6% from its recent peak of 6.8%. And inflation was, using the core measures, about 2.7%, which is just above the Bank of Canada's 2% target. Obviously now, though, we find ourselves in a different situation where tariffs and the uncertainty surrounding trade policy is weighing on not only the Canadian economy, but we are seeing some signs of weakness come also in the U.S. and global economies, which have impacted monetary policy. So we saw over the past 2 weeks that policy was priced in only for a 25% chance of a cut today, moving that all the way to 100% over the past 2 weeks.
Okay, so as you say, Canada was on solid footing coming into the year. How are these tariffs impacting Canadian monetary policy?
So what you would typically expect for a trade shock in Canada is that it would weaken growth first. So you'd see that through business investment, consumer spending, as well as hiring plans. And typically, when you see a growth shock, you'd expect that inflation would fall as well. But in a trade war, you actually are going to see prices increase. And that's going to limit how much the Bank of Canada will be able to cut. Right now, they have a little bit of flexibility, but how things like inflation and growth evolve in the future will really impact the path of policy rates going forward. Ultimately, government spending is best suited to addressing tariffs. Right now, we do still have some uncertainty, especially at the federal level, about what policies will come into place, how much and when. So we'll be continuing to watch that. And unfortunately, the theme of uncertainty does continue there as well.
Okay, so when we look at this latest cut, it leaves the Bank of Canada's overnight rate at its neutral range right now. How many more cuts do you expect this year?
Yes, so right now the Bank of Canada's interest rate is 2.75%, which, as you mentioned, is the midpoint of the neutral range. So what that means is that from the Bank of Canada, they don't expect it to be either stimulating the economy or restricting the economy. What we have right now priced in is 2 more cuts to the end of the year. So that would bring the overnight rate down to about 2.25%, which is the lower end of the Bank of Canada's neutral range. I think that's reasonable. As I had mentioned, how inflation evolves will limit how much the Bank of Canada can cut. And I think this line from the Bank of Canada statement that monetary policy cannot offset impacts of a trade war, but that they will ensure that higher prices don't lead to ongoing inflation is important and demonstrates that they'll take a balanced approach going forward, and they'll have to be a bit patient given the uncertainty.
Okay, so talk to us about how this uncertainty potentially impacts the bond market going forward.
So when we look just even at the past 2 weeks, what we've seen is that the yield curve has steepened. So while front-end rates lowered by about 0.3%, long-end rates only came down by about 0.1%. So the long end not moving as much as expectations for Bank of Canada rate cuts. And that's actually what you would expect in this kind of environment, because long-term rates are more influenced by things like growth, inflation, and fiscal policy, things like how much debt a government might issue to help support the economy. So going forward, you could continue to see this steepening. Just to put something into context here, I think if you think about the 5-year rate, which really influences mortgage rates, you could see it not fall as much as expectations for Bank of Canada interest rates, and it could be a bit more stable.
All right. Now, looking ahead, how do you expect the Canadian dollar to perform going forward, given all this uncertainty in the markets around trade policy?
So right now, the Canadian dollar has been in a range of about 68 to 71 cents versus the US dollar. I think that's a reasonable range going forward. What you could see is that if we get a more severe or deeper tariff situation, you could see it weaken further. If we do get a true resolution of tariff policy, it's not tariff policy, it's trade policy, then you could see it go higher. But I think for now, I wouldn't expect it to be going above 72 cents again in the near future.
So looking ahead, what are some of the things that you'll be watching closely as the Bank of Canada considers its next move?
Yeah, going forward, we'll be looking at both hard data, so that's backward-looking data, as well as soft data, so forward-looking data. What we've seen so far is that the hard data, things like GDP, employment, inflation, has actually been firm, where soft data, like outlook surveys and sentiment surveys, have already started to weaken. We've seen that not only here in Canada, but also in the US as well. Actually, interestingly, the Bank of Canada put out, alongside its statement this morning, an update on businesses and households and how they're interpreting the impact of the trade war so far. And what we've seen from that is already businesses are cutting back on future spending plans, hiring plans, and we've also seen consumers also cut back a bit on their future spending. So we'll be continuing to watch how that will evolve as this fluid situation evolves. So when we have the Bank of Canada's next meeting on April 16th, before that we have the Business Outlook survey, so we'll get another look into how businesses are reacting, as well as a couple of inflation reports, GDP and employment. The other thing that we'll be looking at is how this hard and soft data is evolving in the US, because that will impact the Canadian economy as well.